Salam and namaste guys. So today we will discuss the fifth chapter of the accounting, which is the reporting the financial results, where we will mainly discuss the temporary accounts which will be closed, and we will also discuss that how these temporary accounts will be closed. So starting from this adjusted trial balance, where we can see the many accounts including the cash, account receivable, and so many. So these cash, account receivable, tools, trucks, notes payable, and account payable, capital stock, these are the transferable accounts or permanent account that will be transferred from one accounting period to the next accounting period. While these dividends, revenue, and the expenses, these are the temporary accounts, and they are supposed to be closed in one accounting period, because in the next accounting period they will be started from inception point. So here we have made the income statement where we deducted all the expenses from revenue in order to find the net income. And as we have already discussed that business earnings or the net income increases the retained earning, while the dividends and losses, business losses, decreases the retained earnings. Here how we make the retained earning. First of all, we put up the starting or the beginning balance of the retained earning. Then we add the net income. As we said that net income will increase the retained earning account, so we will add in it. So subtotal is 400, and we also mentioned that the dividends will reduce the retained earning account, so we will deduct the 200 dividends from subtotal, and the retained earning will be 200. Now these are the accounts which are temporary accounts, and we will learn that how these accounts are closed. First of all, the revenue accounts, this is the temporary accounts, and that will be closed into the income summary, and expenses the same as also the temporary accounts, and that will be closed into the income summary. While income summary itself is a temporary account, and that will be closed into the retained earnings, and dividend in loss will also be closed to the retained earning. As we said that dividend will reduce the retained earnings. Here we how the sales revenue is closed. If we can recall, sales revenues normal amount is in the credit, so we will debit the sales revenue in order to close it, and we will credit the income summary. We can see here that the normal balance of sales revenue was 750, and we debited it in order to close it, and the normal balance of income summary will become the 750 in the credit side. In the same way, the normal balance of expenses in debit side, so we will balance it or close it by crediting all the expenses and debiting the income summary. So in this way, we can see here normal balance was in debit side, so we credited all the expenses and debited the income summary account. Now we can see here that the normal balance through the sales revenue was 750, and through the expenses the 350, and the remaining income summary amount is 400, which is same net income which was in the income summary and in the income statement. And we said this, that net income will be closed into the retained earning, and the retained earning will be increased through this amount. Here we can see here that the normal balance of retained earning is in credit side, and we are increasing it by crediting it, and we are debiting the income summary account in order to close the income summary account. Here how we are closing the income summary account. So in starting we have 0 retained earning beginning, and 400 we added this, so subtotal is 400. And we said that we pay the dividend from the retained earning, so retained earning will be reduced by debiting the retained earning and crediting the dividends. So in starting we had the account of dividend with the normal balance in the debit side, so we close it by crediting it by 200 and debiting it to the retained earning. So in this way the retained earnings are reduced by 200, and the total become the 200 again. So here is the after closing trial balance. So many temporary accounts like revenue, expenses, and dividend accounts that we observed in the last before closing trial balance, you will see that these accounts are not included in the after closing trial balance. And here how we evaluate the businesses. The main two criteria are the evaluating the profitability and evaluating the solvency. When we evaluate the profitability, we see the current profit as well as the potential profitability of the future, while when we evaluate the solvency, we see that whether the company is in condition to pay its debt from the assets or not. This is all about the fifth chapter.